I do have a funny story. One of my clients, he left for, I believe, like Italy or Greece or something. He was gone for like 2-3 weeks. That was right, when he came back was like right when we were sending out our monthly statements, and he called me. He's like, Jacob, like, I forgot I had this property. I'm like, oh, what do you mean? He's like, yeah, you guys have been handling it, haven't had to worry about it. Nice to see that there's plenty of money in the account. Like, this is great. This is exactly what I wanted.
You have found Authentic Business Adventures, the business program that brings you the struggle stories and triumphant successes of business owners across the land. Downloadable audio episodes can be found in the podcast link found at drawincustomers.com. We are locally underwritten by the Bank of Sun Prairie, and today we're welcoming / preparing to learn from Jacob Walter, the VP of Finance at Patriot Properties. Well, Jacob, how's it going today?
I'm doing well, thank you. Thank you for having me.
Let's start with what is Patriot Properties?
Yeah, Patriot Properties, full-service property management company. So we kind of joke around that if you can rent it, we'll manage it for you. We do, obviously, our bread and butter is multifamily. We do short-term rentals. At one point, we did camper van rentals.
Oh, wow. You weren't joking.
Yeah. Don't do that anymore. That was an interesting time. But storage units, whatever you can rent, we can,
right on.
Real estate-wise, we can manage.
All right. And how long have you been with them?
I've been with Patriot for about 5 years now, just short of 5 years. So.
Sure. And tell me, VP of Finance, is that finance for internal within the company? Or is this more external, helping investors and stuff like that?
So it's more internal.
Okay.
Obviously, with property management, you're kind of a VP for finance for all the clients you have. So we have 122 different bank accounts, if you will, that
sure.
I'm VP of finance for.
All right.
So it poses its challenges.
I bet.
But it's fun.
All right. It's fun.
It is
I wonder
fun.
how many people would agree with that. Like, oh, VP of Finance sounds like a blast. So how do you get in that world? How do you end up as a VP of Finance?
Yeah, so I went to college, to do the accounting route. Kind of bounced around a few times before Patriot Properties. And how we kind of found Patriot Properties is a little bit of an interesting story. But you just, kind of went in there. Chris needed more of an accounting role when he was starting. So I've been there since almost the start.
Okay.
And he essentially just worked up with Chris.
Okay.
Being his number two from the get-go kind of thing.
Gotcha. All right. How did you end up meeting Chris?
So I had an internship at Northwestern Mutual.
Okay.
This summer.
Like half the world, right?
Yeah. Weirdly enough, we found out that we worked with each other but didn't realize it.
Oh, funny. At Northwestern Mutual?
Yeah, so we both worked in the Middleton office.
Okay.
And I did just apply for the Patriot Properties accounting manager position. Get to their interview, we're like, we recognize each other. Like,
oh, funny.
Where is this from? And it comes out that we both were at Northwestern Mutual. A lot of his mentors that were there were also my mentors.
Sure.
But we bond over the fact that we went through that, the challenges that can pose. So.
Did you go to try to be salespeople there?
Yeah, that's what we were both working.
All right.
Yeah.
They
so
push men,
smiling,
out.
dialing. Oh yeah. So.
Get your parents and your friends and your aunts and uncles on the
right.
life insurance or whatever.
You find out who your true friends are when you get done with that internship.
True friends that actually bought life insurance from you?
No, that still talk to you after.
Are they the ones? Didn't you sell me life insurance? Yeah, I don't work there anymore. How long were you there?
I was there for a year. So it was the internship through essentially my senior year of college.
All right.
So it was...
That's funny.
Yeah, it's. I'm not afraid to pick up the phone and talk to anybody. Right?
No, that's good. That's very good.
That's a skill that's very, very much needed in the real estate world.
That is a rare skill.
Yeah.
That is an incredibly rare skill. I know quite a few people that have gone through that. Some still there, and most not.
Yeah,
but that's,
exactly.
The churn them.
Yeah, I mean it's a very hard industry to start out in. To your point, yeah, it's just a numbers game to a lot of those companies.
And I think once you get going, you're fine. You're making money.
Oh,
and you're coasting essentially, right?
Yep.
until your clients die. But
Until you're not.
but before then, you have to build that
Yeah,
base,
yeah.
and I think it's hard work.
Yeah.
And it's like, why should I buy life insurance from you?
Well, yeah, right. And that's
I'm
the interesting
starving?
thing. Yeah, I mean, that's the interesting thing. There's such a small population in the world that actually need that, right? I mean, yeah, if something happens, it's nice to have, obviously. Like, I have life insurance from when I worked there too. So, but like the group that actually needs it is such a small group.
Right. Interesting. Huh. So did you have to get all your tests,
Yep.
all your certifications and all that jazz?
Yep, yeah, life, disability certified, all that fun stuff.
How hard is it to get those?
It's not overly difficult.
Okay.
For the basic stuff, it's not very difficult.
I always wondered, because I meet a lot of people. You meet a lot of
Yeah.
people just networking, going around. And you meet these people like, I got all these certifications. And I always wondered, how hard is it to get that?
Yeah, I mean, once you get into the investment side, it gets a little bit more difficult.
Okay.
So you're like Series 66, I think it's called, and stuff like that. Those are a little bit more challenging.
Okay.
But essentially, to start doing life insurance, disability insurance, those are rather easy. I mean, it's not any more difficult than taking like the realtor exam.
Gotcha.
And test
Okay.
and studying for that. So.
All right. I don't know how hard the realtor exam is. I assume it's pretty easy based on the volume
There's
of
a
realtors
lot of
we
realtors
see.
out there.
And the people that do it as just a side hustle,
Yeah.
like, oh yeah, by the way, I have 5 jobs as well as this.
Yeah, there was a statistic out there that I think like 85% or something crazy like that, have the realtor license but had 0 transactions. It would have been last year.
Wow.
2024,
Okay.
yeah.
So it can't be that big of a deal to take that test.
Right.
Okay.
Assumption.
The barrier to entry is low. I know a lot of real estate agents, and many are cool.
Yeah.
Others, I'm like, I guess you can fog a mirror. I don't know, whatever. So tell me a story, the VP Finance.
Yeah.
As you guys grow, that job gets more complex, I imagine, right?
Yeah, there's definitely a lot more intricacies to it. So when we started out, when I started out, I should say, we had just under 700 units.
Okay.
We're touching 3,000 today.
Oh, wow.
So,
okay, so you've grown.
Yeah, we're roughly 50 to 75% year over year. And we do see
That's
that.
incredible.
Yeah, we do see that, continuing
Sure.
in the next few years here as well. Are we going to be able to keep that up forever? No. I mean,
Forever would
those
be a
are
long
big
time,
numbers.
yeah.
Yeah. So, but yeah, there's a lot of challenges that come along to it. This client wants his financials done this way. This gentleman over here would like it done a different way. Luckily, I have a fantastic team. Below me, I have 5 other accountants. So,
Oh, wow.
they're good.
All right.
They help keep the ship sailing. So
did you help hire those 5?
yep. So
Okay.
I hired them all.
All right.
Yep.
And what do you look for in a good accountant?
Organization is the biggest thing.
Okay.
Right. A lot of the accounting stuff. I mean, yes, you need the basics, but it's all going to be, like I said, based on the owner, how they prefer their financials at the end of the day.
Okay. Because I think when I hire for the call answering service, we have certain things that we want. One is, how does your voice sound and stuff
Yeah.
like that. 2 is from a confidence level, where you're at that way. And
Yep.
we have these certain questions that we ask to try to figure out, are you as cool as you say you are?
Right.
Or can you do the job?
Yeah.
So I just wonder with accounting, people are like, hey, can you add 2 plus 2?
Yeah. It's almost that simple.
Okay.
Obviously, there's some intricate questions that we do ask. Have you what have you done in like the balance sheet accounting, your GL accounting, stuff like that. So, but at the end of the day, like if they fit well with our team, I mean that's a huge thing.
Oh my gosh, character is probably
Right, is
one of
almost
the
the
biggest.
Exactly. So we could teach you the rest.
Okay.
Right. So I've had a couple people on my team that progressed through the company that had no accounting background per se, but succeeded in doing what they were doing.
All right. So tell me a story. You mentioned multiple bank accounts. So is the idea that you have a bank account for each property?
It's not necessarily each property.
Okay.
It can be. So we have some owners that are like that have a bank account for every property. Other owners have, one bank account for 40 properties, 100 units.
Okay.
So again, it goes back to the, ownership preference, how they want their financials worked.
Sure.
Essentially. So.
Okay. I'm going to say taught, but more like YouTube taught.
Yeah. YouTube University.
Yeah, I guess some of the gurus that I've listened to said set up an LLC for each individual property.
Each property, yep.
Others are like have blankets.
Yep.
Others say individuals and then have blankets above that.
Yeah, I mean I won't get too much into that, but that's like the legal side talking.
Okay.
Right. Each individual LLC, protects an LLC. All that is a protection layer. Obviously, it has to be set up correctly. But like LLC in the finance side doesn't necessarily matter. That's more, LLCs are created for like asset protection.
Sure, but I guess in that regard, you want to not pierce the veil, so you'd have separate bank accounts and stuff like that for an LLC.
Right.
Separate credit card or separate stuff. Keep them independent of each other.
Correct.
So it's not like, hey, we have all these LLCs in one bank account.
Right. Yes. So, I mean, that's to your point exactly. It helps asset protection. But, we have one client that has 500 to 1,000 units run through one bank account, And
interesting.
It's the insurance side that, helps protect on the back end.
Okay.
So.
Tell me a story about when you have that many units. How do they even keep track?
Sometimes they forget.
Okay.
I do have a funny story. One of my clients, he left for, I believe, like Italy or Greece or something, and he was gone for like 2-3 weeks, and that was right, when he came back was like right when we were sending out our monthly statements, and he called me. He's like, Jacob, like, I forgot I had this property. I'm like, oh, what do you mean? He's like, yeah, you guys have been handling it, haven't had to worry about it.
Yeah.
Nice to see that there's plenty of money in the account. Like, this is great. This is exactly what I wanted. So.
I'm going back to Italy. Yeah. Oh, that's funny. I've had friends that I can think of a few where they have management company taking care of their stuff. And so they're like, money comes in, money goes out. There's some months that they have to pay in and other months that they get their nut, whatever.
Yep.
And it's just, I remember the guy saying he drove past a property that was a few towns away from where he lives, and he was reminded, he was like, oh yeah, I own that. I wonder how it's doing.
Yeah, I hope one day I can own enough property to get to that point.
Yeah, it's like when you're playing Monopoly, right?
Yeah.
And somebody lands on your square that you're, like when you've been playing it for hours.
You're right.
And you're like, wait.
Shuffle through all
I
the
own
cards.
that. Let me see where.
Yeah.
Hopefully it's
funny.
Park Place, not Baltic or something.
Right.
Oh, that's interesting. So are you giving advice to any of your clients, financial advice, or how does that work?
Like an investing advice, I would say. Yeah,
Okay.
with real estate, that's definitely part of the gig, if you will. I had a call a couple weeks ago with a client that was looking to refi, and I'm like, maybe let's hold off.
All right.
All that kind of adds up into the performance, right? We look really good when everybody's making money. We're always the problem when they're not. And, sometimes it's like, did you see how much you paid for this building? Like,
Right.
The back end finances are definitely a big thing. So we help them out in underwriting properties to the point of like, hey, this property is ready to refinance. Are you going to look for something new?
Okay.
We have a group of guys that we work with. I call them the bird dogs. They're the cold calling, sending the mailers out. And they bring us properties nearly daily. And some of those we kind of throw out to some of our clients that are ready to buy. Not all of them are deals. I'd say probably 25% are worth talking about.
Okay.
The other 75%, they said yes, but they were given the make me sell it price. So.
Oh, gotcha. Okay, yeah.
Yeah.
Everything's for sale.
Yeah,
It's
everything's
just-
for sale for the right
whether
price.
it's worth it or not. Yeah.
So.
Got it. Let me ask you a financial question when it comes to investing in property. The age-old question that you always hear is, do you pay off your loan, or do you just maintain and invest in other property?
Yeah. I'm going to give you the most accounting answer ever.
All right, it's going to be it depends. Yeah. The attorney say it, the accountants say it. Like, you went to school for years to say it depends?
Exactly. So it really matters what you're looking to do.
Okay.
So in my investment cycle right now, I'm cash out refining as much as I can to build.
To build your portfolio?
To build the portfolio.
Okay.
Yep, 100%. So for instance, like I went from 5 units to over 30 in this past year.
In a year?
In a year.
Holy cow. Okay.
So, and none of that was money being put in. It was all repositioning, refinancing, selling some, buying some, getting the rents up, selling them pretty quickly after that.
Okay.
But it truly depends. Like if you just want to invest to have that extra cash flow, you don't want to retire off real estate, my recommendation would be pay it off as fast as you can.
Okay.
But if you're really looking to scale, looking to grow, you have to be aggressive, right? Because if you're not, the next guy in the game is. Mm-hmm. So there are a lot of people in real estate, and especially that beginner level, that the 4 to 10 units. It's still achievable financially for a lot of people to be in the game. Obviously, once you get into 20, 30, 40, 50, 100, then you're battling with some of the big boys.
Sure.
But,
where do you want to be?
Where do I want to be?
No, I mean,
or where does somebody want to be, right?
Where would be, boy, let me think about the question. Best bang for the buck, let's say. Is it when you're competing, when you have fewer people you're competing against, so you're in a larger units?
Yeah, 100%.
Or do you want to be where it's a smaller
Personally,
outlay?
I like kind of the middle.
Okay.
Right? There's this kind of lost zone, if you will.
Okay.
In that, 20 to 30 to 40 units. If you can get in there, like it's large enough that you're not getting the weekend investors, if you will. And it's small enough that you're not getting some of that institutional money.
Okay. Where they come in there with 20 million cash.
Yeah, exactly. Good luck finding those right now. Real estate just in general is in such a weird
it's bizarre.
Transition zone, if you will. But like that's kind of the range that I'm finding some of these deals, starting to become deals.
Okay. So I've been shopping for real estate, and you see the graph of pricing. Mm-hmm. If you look over I'm going to say 10 years,
yep.
It seems like this graph is like, hey, stuff is up, and then it's like kablam.
Yeah.
This hockey stick.
Yeah.
And then in my mind, I'm like, well, that seems like there's a correction that's coming up.
We're seeing that.
Okay.
Yeah. So we are definitely seeing some prices come down, more reasonable. There's some, I won't say too much, but there's some stuff in Madison, newer built, that's being foreclosed on.
Oh.
In the
newer
Madison
built.
area. Yeah.
Okay.
Like in the last 5 years, I would consider
okay.
it. So when we start seeing that, we know prices are going to start coming down.
Gotcha.
They were leveraged too much and couldn't fulfill what they needed to.
All right.
Madison's kind of a unique market. A lot of units have come to market in the last year,
mm-hmm.
And a lot of A-class downtown stuff. So
okay.
that definitely adds to it as well. There kind of is this culture of these people that hop from new property to new property. And if you're only having people in your property 1 year and then you have to turn it, there's costs associated with that return. So, that adds to that as well.
Okay.
So.
Interesting. Why would they move from new unit to new unit?
They just like the newest and greatest thing.
Okay.
Right. So the apartment complex yesterday,
mm-hmm.
Might not have XYZ amenity. This one doesn't have a golf simulator, but this one does.
Oh.
This one doesn't have,
These are not the college dumps that I grew up with.
No. Wow. No, you should see some of the stuff that's downtown.
Golf simulator? I was lucky to have a light switch. Wow.
Yeah.
All right.
So.
Interesting. Tell me where you've seen rent go. Let's talk about Madison, and then I don't know how far out you're...
So that's a good point. Patriot Properties, we have stuff all the way in Toma.
Okay.
All the way down to Monroe. We have some stuff in Waukesha, Platteville. So we kind of follow the interstates.
Okay.
We're not, we're going to Iowa. Next thing we'd love to get into is like the Fox Valley area, Green Bay, Oshkosh,
mm-hmm.
Fond du Lac area. So we do have a large geographic location.
Yeah. Where have you seen rents going up or maintaining?
Rents are maintaining to going down.
Going down.
Yeah.
Okay.
So, part of that is obviously the big influx of units in the past year, specifically in the Madison area.
Okay. They keep adding and keep
yeah,
building.
they keep building. I mean, you go downtown, you see how many cranes are in the air right
a
now,
lot of cranes.
right?
Yeah.
Those are all, multifamily or student housing. When you kind of start pushing out, it's stabilizing to a point. If you get too far out, it's starting to decrease too.
Okay.
What was great, and we're not really seeing the positive effects as much anymore, was actually COVID.
Okay.
Right. So as long as you weren't downtown Madison, a lot of these people moved out to have a little bit more space, to have that kind of calmer lifestyle. We saw that in multifamily, and obviously it was in homes too. So it's not necessarily a fun time to be in real estate, especially if you just bought.
Right.
Because
Because you're seeing the value go down.
Yeah. Well, when you buy something, the expectation is I'm going to be able to raise rents. Well,
right.
Sometimes that's not
still
possible.
Hope.
Yeah, and you still have to turn the unit to get the same amount of rent. Well, if I bought this building, I had to put $10,000 into a unit, and I'm only able to get what I was getting before. Like that's an old crap moment.
Right. Okay. So I keep hearing from real estate agents, right? Talking to them, they're just like, oh, it's a competitive market with buyers. They're coming in with all these cash buyers and stuff like that.
Not anymore.
And I was like, are they, or why?
Yeah.
Why would they be coming to buy from my point of view, a rental property is a business.
Yeah.
So why would you buy a business that's not cash flowing?
Right.
Or it's not profitable, I should say. There's money coming in, money going out, but the money that you end up with is in parentheses.
Yeah, I mean, it really depends on the buyer.
Okay.
There's some people out there that, not strictly for depreciation, but depreciation's a big factor for some of these people.
Okay.
You get the real estate designation, you get to write that off on any W-2 income that your spouse may have too.
Okay.
So,
they're buying
there's a lot
for
of
the tax
different,
benefit.
Maybe, right?
Okay.
I mean, it's hard
Or
to
it
say.
could be.
There's some stuff that's happened in the market that I'm scratching my head at still. One day you hear this sale that's ridiculous. The next you're like, there's 5 deals on market. Like, what are these people looking at?
All right.
So it's a very confusing time in real estate, multifamily specifically.
Gotcha. Okay. That's the market you're in,
Yeah,
right?
yeah.
So when somebody brings you a property and they're like, hey man, can you rent it out and do your property management thing?
Yeah.
Are there any criteria you go through where you would say yes or no? Or I guess more specifically where you would say no, not a good fit?
The biggest thing is the conversation with the owner.
Okay.
So the biggest fact, I mean, real estate is really real estate, right? Like it's a home for somebody. Mm-hmm. It has a bedroom, it has a bathroom, it has a toilet. So the bare bones of real estate is relatively the same across the board. The changing factor is going to be the owner, and are we able to provide the expectations that owner has?
Okay.
Or, I mean, in some cases, are the expectations just unreasonable?
Where they don't want to invest any money in the property,
Correct.
or they want to hey, make rent $5,000 a month?
Yeah, both.
Okay.
Both. So, yeah, I mean, we've had it all across the board.
Okay.
So, we have, like I said, some owners that forget they have the property, and some owners that my team's on the phone with them every other day.
For good reasons, or?
Well, good, bad, just catching up too.
Okay.
So, yeah, it's not necessarily like how much, we have to communicate with, but to your point, we have this property that needs the work done. Mm-hmm. We need to be able to do it.
Right.
And we get some pushback on some properties, and it's like, well, maybe we aren't the best fit. So.
Gotcha. I was looking at a property earlier this week, and we talked to the tenant, and she was so straight-faced, and we're like, what's been your experience at this place?
Yeah, that's a huge thing.
And she said, she was like, blah, 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 it has a water feature. And I was like, wait, hold on a sec. When you say water feature, do you mean decorative water feature? And she's
like a
like, no. We have this huge leak that's been going on for over a year.
Man, yeah.
They had a boiler and all this kind of stuff. And I was like, oh, that's an interesting way to put that. And like, no one's come out to fix this thing?
Yeah.
And she's like, no, you can see the drywall bubbling. Like,
Oh, man.
oh my gosh, what's
Nightmares.
behind that wall?
Yeah, 100%. I mean, that's like when I'm going to look at prospective properties, that's my favorite thing to do. You know, I make sure the building isn't falling down, but beyond that, like your best source of information is the tenants.
Yeah.
You know, because for that, right, they haven't taken care of that. What else haven't they taken care of?
Right.
You know, what kind of nightmares are you going to unfold? And, you know, a lot of people kind of get too excited about, oh, I have this property, I have this opportunity, and they forget to do that part of the due diligence. And,
Yeah, never fall in love with the deal, right?
No, it's, take your emotions out of it.
Right.
So.
Interesting. Tell me, when you are buying a property, do you have some kind of a hard and fast rule when you're looking at properties? Like there's a 1% rule?
Yeah,
I
no,
mentioned
it's
you're,
not.
You're VP of Finance, so you probably have an algorithm that's...
Yeah, not so much that. I mean, yes, I have the numbers to look at, but to answer your question, no, I don't have a hard and fast rule. The 1% rule is strictly just a reference. What we look at is obviously the feel. Are the layouts good? And is it a market I know? And what rent can I actually get? And how much work does the unit
Tell me
need?
about the layouts.
So 1 beds versus 2 beds.
Got it.
Is there...
Okay.
Is this labeled a 1 bed, but it actually is a 2 bed? Like we've run into issues like that.
Will they label it under?
Yeah.
Why?
Yeah, I don't know.
Okay.
You know, they call it like it's a smaller bedroom, right?
Gotcha.
So they might call it like an office or something. But you know, for a family with a young child, like that's totally doable. That's smaller.
I guess that's fair. I looked at a property that was it was a single family house, and they called it 2-bedroom. But when I walked in the 2nd bedroom, I thought, I don't even know if you could fit a twin bed in here.
Yeah.
So I guess it's a room with a door and a window.
Yep.
But that's where I guess it's a bedroom. Maybe if you throw a towel and a pillow on the floor.
Yeah.
So I suppose it depends who's counting.
Right.
Yeah.
Right.
To me, it was a very large closet.
You know, somebody's wife might have loved that.
Sure, maybe, yeah. So, okay, I get what you're saying about the layout there. Okay, so it's not like this room is here, this room is there. It's just number of bedrooms, number of bathrooms.
Yeah, it's just the overall basic layout.
Okay.
And is there something being missed, right? Is there an opportunity to add another bedroom?
Okay.
That's a huge value add if you could take a 1 bed to a 2 bed.
Yeah, I bet.
You could get maybe $300 more depending on where you're at. So.
And how would you do that? Would you basement, add a big window, add a room there?
No,
or
not
just...
even. Like to me, that would be too much.
Okay.
Right. That.
Too expensive.
Yes, exactly.
To
Like,
get your
is the
return.
payoff going to be
Okay.
there 100%? More so like, hey, this is an office right now. Can we add a closet?
Got it.
You know, stuff like that. Because, you know, in a rental office, like they're not as needed, right? So that's something that we always look for is that, value add that we can bring at a relatively, affordable price.
Got it. And then you mentioned raising rents.
Yep.
And does that just go in there and say, hey, your rent they're never at market.
Never.
Right? They're always
never.
selling it at below market rent. You could easily raise rent.
I love
here.
that. I love when people say that.
It's like buying a motorcycle and they're like, the carburetor just needs a quick cleaning.
Yeah, it's really funny because I had a phone call last night, and I won't give too many details about the deal, but they had 18 units, want 1.6. They're grossing like $12,000. I'm like, this doesn't add up, right?
Right.
Like, they're like, well, we've gotten one person at 900. I'm like, that's what we're trying to sell this off, and I'm like, that's not how it works.
Yeah, right. This whole
I have to
speculation.
I have to put $10,000 a unit in all these 17 other units to even get anywhere close. So, that deal didn't transpire, obviously.
Right.
So, but yeah, we see that a lot.
All right.
Just raise the rents. It's not that easy.
Like they were being this so good donor kind of thing. We're just charging cheap rent just because I hate money.
Or my other favorite one, I've had these tenants for 10 years. It's like, to me, that's a red flag almost.
Okay.
Yeah, so if you have somebody for 10 years, I mean, obviously you look at the rents, but that tells me that they're vastly under market.
All right.
Right? You probably haven't raised the rent. You know, what hasn't been taken care of in the units. You know, there's some things that are very easy to do when the tenant's not in there and more difficult. So that's, you know, a lot of people are like, oh, you know, long-term tenants. When I'm buying a property, like, to me, that's not interesting.
Do you aim for properties to be empty?
No, no.
Not necessarily. Okay.
I wouldn't say that, but you know, when the seller tries to say that that's like super valuable.
Sure.
You know, to
you
me,
can
it's like,
keep
well,
making less money than you should.
Yeah, but you know, they've had one unit that's been 900, and they, you know,
Sure.
we're going to base the whole price off of that.
Got it. Okay.
So
Interesting. So when you get a property, are you doing any fix-up stuff, or is there maybe the bare stuff that like, hey, every time we go into a property, we change, I don't know, flooring, paint, something like that? I don't
yeah,
know.
so like our unit turns, or are you talking like overall property, like common areas, stuff like that?
Well, boy, I didn't even think about common area. What do you do with common area?
So common areas, you know, if it's really bad, we'll address those, but we tend to kind of leave those last.
Because there's so much traffic.
Yep.
Once people get in their apartment, common area doesn't matter.
Right,
All
exactly.
right.
So
Smells like cats and cigarettes.
yeah, I mean, if it's like that, we'll, you know, do what we need to do. If we need to paint, we need to, you know, get the carpet clean, you know, stay on that carpet cleaning schedule too. So, you know, sometimes some air fresheners in the hallway kind of thing. We'll take care of that. But no, we see obviously the most value return on the dollar is investing into that unit.
Gotcha.
Obviously, if the outside looks really bad, you got to take care of that as well. But typically speaking, nothing's too crazy when we go to buy it. You know, that we're able to kind of start on those units right away.
All right. What is the deal with the landscaping in these properties? Because from my point of view, and I'm seeing like I've looked at some properties, certainly not the great percentage of properties that exist.
Yeah.
But it seems to be at one point somebody planted some bushes or trees, and I'm going to say they took some kind of care of it, and then 30 years happened with nobody touching it.
Yeah, the
Stuff
weed
is
trees.
overgrowing. The lawn is barely grass.
Yeah.
I'm like, why don't you just get rid of everything and just either make it grass or gravel? I don't know, something. But it looks
that's
dumpy.
Right. When we do landscaping, we make it minimal maintenance.
Best kind.
Yeah, exactly. So
even where I live, I don't want to. I don't want to be like, oh,
yeah.
I got my Saturday available.
You're gonna go weed the flower beds.
Yeah.
Like, get out of here.
No fun.
So I mean, that's something that we look to do too. Is that, you know, minimal, do the rock, you know, put that good weed barrier down so you're not, you know, having to spray or whatever. Our lawn care contractor, he'll spray the rocks for us. For very minimal. So that's kind of the plan on the. I don't like bushes. I don't like trees right next to the property.
Yeah.
You have to maintain them a lot, and once they start looking bad, it's really hard to get them kind of under control.
Right.
Again.
Yeah.
So.
Yeah, I was just at a property where they had a tree that was buckling the sidewalk.
Yeah.
And I'm like, what do you do with that? Because as soon as you fix that sidewalk, a year later,
it's just gonna pop again.
Like the tree doesn't care.
No, you gotta cut that tree down.
Yeah. So it's just interesting how, like, who put this there?
Yeah.
When you go into a property and it's kind of dumpy, but they do have tenants, do you say, hey, tenants, we're going to fix this property up, and if you want to stay, great, but rent's going to go up? Or what do you do there?
So we don't necessarily communicate directly with tenants regarding, you know, like the overall plan per se.
Okay.
Like, hey, we're going to come in and raise your rents. Like, we don't necessarily want to freak them out right away.
Mm-hmm.
There are circumstances where, you know, market rent's 1,000. We get this property and the rents are like 700.
Okay.
So what we'll do is we'll kind of split that difference. So send renewals out, split that difference. We're bound to get at least one person to move out.
Sure.
So we'll turn that unit, get that up to market, and you know, tenants see things, tenants talk, and they kind of know what's going on. Now, obviously, we don't want to keep tenants in the dark or anything,
right.
But expectation is when the property sells and, you know, you see our guys there, like the property's gonna be improved.
Gotcha. Okay. When you get a property that's just dated, let's say kitchen and stuff like that, do you get a return on the investment of, I'm going to say, modernizing that kitchen?
Yeah. So it really depends on what kind of market you're in.
Okay.
So we're seeing a lot of those like super dated properties more farther out of Madison, out of Dane County kind of thing.
Got it.
Where the ROI to fully redo those kitchens doesn't necessarily make sense.
Oh.
Like what you can do, you know, sand the cabinets, paint them, do some of these cheaper, you know, more economical fixes to these problems, and they look almost just as good. Obviously, it's not a new cabinet,
Right.
but that renter in that market doesn't necessarily expect it for the price point that they're willing to pay.
Got it. Okay.
Now, if it's a Madison property, it could go one of two ways. Like how are we repositioning this property?
Okay.
So if we're looking, if it's in a really good location and it just wasn't taken care of, you know, mom and pop owned it before, got old, this was their, you know, sell to retire kind of property.
Right.
You know, we might be a little bit more aggressive in those unit terms.
Okay.
Or if we get, you know, a property that's not in the greatest location, or the property that we bought is the neighborhood problem. We love those at Patriot Properties.
Oh.
So we like buying the problems and fixing those community centers. So
Because you can just bump rent up as people leave. You fix up the
we
property.
fix them up. You know, we kind of do it in stages. So we're not going to put, you know, $10,000-$20,000 right into a unit when the rest of the complex is still, you know, working through, you know, what needs to be done.
Sure.
Because that just doesn't make any sense. You're not going to get that return right away. So
That is a perfect segue to ask the question: why would somebody sell a rental property that's actually making money?
well, typically you're going to have a pretty nice payout,
Okay.
right? You know, a couple of the guys that we manage for, you know, we don't make money until we sell.
Okay.
It's like, well, not true, but
I hope not.
yeah, not necessarily true, but
Okay.
you know, sometimes it's just time. You know, people want to go enjoy their lives, like rental properties. Even if you have a manager, like it still takes time. You know, you still have to, you know, be present. You still have to, you know, look over everything. So a lot of times it's just they're tired, right? So
All right.
They're ready to get that check and go sail off to paradise. So.
All right. I didn't know if you run into anyone where they're just like, I'm making money, but the headache from
Oh yeah,
tenants or headache from whatever.
It's always the interesting thing, like, you know, mentoring one of the sales guys at Patriot, and you know, I always say, like, don't ever just call somebody and they say no, I'm not interested. Follow up with them in 3 months.
All right.
You know, you don't know if that day a pipe burst and they want to sell. Like we you know,
Give me $1. It's all yours.
Exactly. You don't know. So there's circumstances, like real estate's a very up and down, like, you know, sky high one day, you know, next day 2 tenants move out, destroyed the units. Like, oh man.
Gotcha. All right.
If the right dollar's on that check, I'm taking
Right.
it. Right. So,
Buying somebody else's headache kind of thing.
exactly.
Do you, I mean, from a financial point of view, that's your background, so do you have any comparisons of returns of investing in real estate versus stock market versus, I don't know, crypto?
Yeah. So
Maybe a bad example there. But
Yeah, I never got into crypto because by that time I was kind of in the real estate game already.
Sure. Crypto's a bad example. I guess all kinds of reasons. But let's just say stock market, real estate, I don't know, art. What else are people investing in?
Right, sure. So I may not be the best person to ask this question to, because I literally have $0 in the stock market.
Okay,
Zero. I do not have a penny in the stock market.
Oh my gosh.
The day I pulled it out was the AMC and the GameStop debacle.
Oh,
so
that was a little while ago.
Yeah. So when that happened, it kind of opened my eyes. It's like, this isn't. It's not. It's almost going to Vegas.
It is.
You know, it's a step below that. You know, extreme.
The house is winning.
Yeah. Exactly. So, you know, all of my funds are in real estate or other businesses as well.
Okay.
I could give you an inkling for my return this past year, going 5 to 30 units,
Yeah.
it was north of 400%.
400%.
Yeah. Obviously, you're not going to do that year over year.
Right.
But yeah, that's
healthy.
a good year.
Okay. That's NVIDIA numbers here. That's crazy.
Yeah.
Wow.
But, I mean, I would expect year over year average in real estate to probably be, it's going to beat the stock market.
Okay.
Maybe you'll be, that 15 to 20%.
That's still healthy.
Yeah, but the understanding is it's not as easy as just investing in S&P
Buy,
500.
walk away.
Yeah,
Sure.
exactly.
Okay, there's time
Yeah.
involved. Okay.
Yeah.
Tell me, 5 to 30 you said? Mm-hmm. How did you do that? Did you buy 5 units or did you?
No. So with partnerships, we got 40 units or 30 units, excuse me, in an Airbnb. Own 25% of that. So those were kind of found on Craigslist. I found one. Facebook. I found one. And then the Bird Dogs found us another one. So
Okay.
and then out of all places, like just randomly logged on to LoopNet, and found another 8 unit for that.
Wow.
That partnership. But the other stuff grew. So I had a 5 unit, sold that, bought 2 4 units.
Okay. Well, now, why did you sell the 5 unit? To get the cash for the.
You know who? It's funny who I sold that to. Cole McCluskey.
Oh, right. The other guy, the electrician.
Yeah.
Okay.
It's one of those points that I wanted to scale.
Yeah.
I couldn't scale to keep that. I
Okay.
needed those funds out of that property. So.
And is that a 1031 type thing?
Yep. So I 1031 that into 2 4 units. From there, we raised the rent pretty aggressively on 1 4 unit. It was a really old building. Like, let's get the rents. Let's get out of this. I don't want to wait for something to happen, kind of thing.
All right.
So we sold that into an 8 unit in Madison here. That property was kind of interesting. They were, I believe, they were actually built as like a barrack style.
Oh.
For Truax or
Okay.
something is what I
Interesting.
was told.
All right.
So the layouts were not good. It was like, think about like 2 living rooms, and one of the living rooms had a bathroom attached to it. Like that was the property. So it was
Sure.
a little weird. So then we ended up selling that into, I think that was a 4 unit and a 10 unit.
Okay.
10 unit I still have. The 4 unit we sold to help fund the renovations at the 10 unit.
Gotcha. Okay.
So, and then if you remember, I still have that 4 unit that I originally 1031'd into.
Yeah.
Took that, sold that. That 4 unit was probably the highest gain single-handedly. I bought it for $250, sold it for $450.
Wow.
In the matter of 3
What,
months,
a 4 unit
months.
for $250?
Yeah,
Was it beat up?
not really.
Oh. Wow.
So, right place, right time.
Yeah, I guess.
A little bit older building. That's the perfect example of an older gentleman that's just ready to retire.
All right.
So, so we gained 200 on that in the matter of 3 months.
Holy cow.
So we jumped that into the part of the 10 unit and then the 8 unit that we just bought. So.
All right. And these are all around Madison.
So the 10 units Waukesha, 8 units Columbus.
Gotcha. Okay.
The stuff that I have with the other partnership, Lodi, Mauston, Toma, and Portage.
Okay. So all
So
north there?
yeah, all relatively close. I mean, there's
Okay.
a couple outliers.
Sure.
but-
And do you find going up in those smaller towns that you have more opportunity there? Because everyone's hovering around Madison or Milwaukee? Or Madison?
It's a different opportunity.
Okay.
Right? There's guys in those markets that don't want to play in Dane County, just like us too,
Sure.
right? So it's a different opportunity. There is less competition. And it seems you can get in front of the seller a little bit. Like there's less realtors involved.
Oh.
And so it helps a
That's
lot
better.
when you don't have to deal with realtors or somebody, kind of making it muddy, if you will.
Yeah, the transaction or the negotiation when you have real estate agents involved, when I, as a buyer, can't just have a conversation with the seller.
Well, right. Like,
and you got to go through this.
let's all four get in a room.
Yeah, totally. Yes.
Have a conversation, and we'll pay you guys. Like,
Yeah.
don't worry, we'll pay you.
Happy to.
But let's get this deal
Happy
done.
to. But they're just like, oh, we got to fill out this form,
Yeah.
fax it to them, wait 24 hours. Like, can we just grab a beer and figure this out?
Exactly.
And see if it's, like, I feel like you're trying to make this more complicated just to justify your price.
Right.
Like, we'll pay you.
Yeah.
Just get out of the
Get
way.
out of the way.
Yeah, interesting. I'm so glad that you said that. Let us make this happen.
Right.
Yeah, interesting. So if someone's new into or wants to get into the real estate game, what would be some of the advice that you'd give them?
I would say don't go alone on your first one.
Okay.
Find somebody that does have experience.
Talking
find
about a business partner?
Yeah.
Okay.
Find somebody that has experience, or get your feet wet by learning. Right. So go find a mentor. I didn't believe that either when I first started.
This is advice you haven't taken.
Yeah, but like looking back, it's like that's 100% how I would do it from the start. When you're 24, you think you know everything.
Yeah.
I'm now 30. Yeah, now I'm 30, and I'm like, I didn't know anything. I just got lucky.
All right.
So yeah, finding a mentor, if you can do a business deal with somebody that's been there, done that.
Okay.
The great thing that I had is I joined a property management company, so I got to see everybody's successes and failures without my money on the line.
So you can learn from that.
Yeah, exactly. So you figure out what works, what doesn't, rather quickly.
All right. And are you guys seeing deals all the time?
It's definitely slowed.
Okay.
But we're seeing like stuff brought to us. I mean, do you want to call them a deal?
You're seeing,
we're seeing
we'll call it
opportunities. Yes.
Okay. Not something you necessarily take up on, but just like, oh, it's a thing.
We're to the point we said earlier, like the market's changing and not for the seller.
All right.
So we kind of have that in the back of our mind a little bit when we're analyzing deals. Is like, okay, and do we need this now? Is this such a great deal we can't pass up? Or is there going to be something, on the horizon?
Got it.
Now, if you're starting out and you find something that's, maybe a base it or a double, jump on it. Because the biggest thing is, getting your feet wet.
Okay.
It's that first one.
So
Once you get that first one, it's so much easier.
All right. I suppose that's just like buying a single family house as well.
Yep.
When they first give you that pile of paper.
It's you still get some of the stomach turning when you see your bank account and it's nicely full, and then you buy a property and it's not.
Have money in that?
Yeah, you're like, oh man, was this the right thing? But no,
it seems like it's one step back to take two steps forward kind of thing, where you just like, wait a second.
Yo-yo, right?
I had money, I got rid of the money in order to make money.
Yep.
But I could have just kept the money.
Yep.
What's the goal here? Yeah, fair. Do you, I guess, from a buyer standpoint, from a seller standpoint, do you see sellers willing to negotiate on pricing now since the market's a little shaky? Or do they just keep it and deal with it?
Yeah, you'll see a little bit of both, right?
Okay.
It depends on that person's timeline
Right.
or what's going on, right? So, like for instance, that example I said about the 1.6 for the 18, they were as firm as can be at 1.6.
Really?
Yeah, they were like, no.
And they will be for the next 10 years.
Yeah, we don't need to sell now. We're ideally we want to get rid of it before next summer, so they have time. They might come across somebody that's willing to pay that.
Okay. Who would be willing to pay that?
I don't know. There's people out there though.
Okay.
Like for instance, if you have a 1031 and you couldn't find anything, right? You didn't identify.
Yeah.
And you have a big enough 1031 that you want to do. Okay, maybe it makes sense.
Okay.
But
so you're banking on the tax savings to compensate for the
overpayment. Yeah.
Okay.
And maybe we were quite far apart.
Okay.
So to say they're fully stiff at that 1.6, I don't know. Could you get them down to 1.5, 1.45, something like that? Maybe.
Okay.
But we were at 1.2, so
okay, that's a
75 per 25% discount.
Yeah.
I completely understand why they're like no. So.
All right. Well, maybe they're just the market will let them know. Interesting.
And there's some people that don't have the same operating costs as us.
Okay.
Right. So if you're doing it all by yourself.
Oh my gosh. That's one of the questions I want to ask you.
Yeah.
The people that don't use a property manager, I mean, I imagine they're going crazy. That's how heart attacks happen. But what has been some of your experience just coming across people that hire you saying, hey, I need someone else to take care of this headache?
Yeah.
Tell me what their experience has been.
So I have a story before that, and then I'll answer that. So the greatest example I have of this is one of our largest clients. Him and his group have about 4,000 units. He started at the same time as one of his good friends did. He has about 100 units.
Oh, wow. That's a difference.
That gentleman's self-managed everything. Our client, never self-managed.
All right.
So your ability to scale, because you have to do that work, is a little bit limited.
All right.
Now, there are people out there, right? They'll hire the team. They'll essentially create their own property management. And you see those guys, scale tremendously. But if you're the person that wants to do or has to do, you can't relinquish that control.
Yeah.
You can still do well, but you're not going to get up to those 1,000 units. That real, wealth, generational wealth, if you will, that comes along with those higher unit counts.
Yeah, 4,000 units. My gosh,
that's a lot.
That is an incredible amount.
That's a lot. So, to answer, can you remind me what the question was exactly?
Oh, just when people come to you having had investment property without a property management company, and they come to you and they're like, help me.
Yeah, so we get kind of two people. We get the person that's grateful, like, oh my gosh, I can focus on my family is a big one, right? I can focus on my family, on my kids now, want to travel. I love it. We have the other people that are like, oh, I had this headache, but then don't necessarily realize that, it comes with a cost.
Oh.
Property management.
Can you manage my property for free?
Yeah.
Oh, yeah.
So it's a mixed bag. Generally speaking, we help vet some of those people out in the initial, property management interview or phone call. So
sure.
We don't want to make our lives overly difficult. Working with a client that's just, I like to pick up my phone and like to talk to the person,
fair.
not get screamed at every time, right? Totally understand stuff goes wrong. We fix it, we move on.
Sure.
That happens, but if I see your phone number come up and I'm like, dang it. What's up?
This guy.
Yeah. So
tell me a story about how you guys figure out what you're going to charge for rent for a given property.
Yeah. So Chris kind of touched on this a little bit, I think, in his. So
there's about 5 million variables. So.
Yeah, there really is. So it depends on how much of the market we can influence.
Okay.
Whether that be direct influence via direct control. So there's some areas that we have majority of the rental units.
Okay.
In that, what we'll do is we'll look at the income, so the average income of that area. To qualify, you need to make 3 times that. So we look at that. Our 2-bed units, we'll kind of hit right into that average income. And it depends on the quality of the units too, right? It might be plus or minus.
So as an example, mathematically, if rent is $1,200, people should be making $3,600?
$3,600 a month.
Whatever.
Yep.
Okay.
Yep. So, and I think that one equates out to, I could be completely off, of maybe around $20 an hour.
Okay.
Full time.
Sure.
So, otherwise, if we have less control, we take those variables into account, but then, we do have to look at competition. What is competition charging? Do we have other amenities that we can, plus or minus? Are our units nicer? Are they bigger? Do we have parking, underground parking? So that's what we're seeing, obviously, more so in some Prairie, Madison, where, some of our properties that aren't new are kind of competing with some of the newer stuff because, the newer stuff is struggling to fill because they have to charge X amount.
Sure. So are they lowering their rents?
Yeah, there's some that are being aggressive to fill.
Okay.
And then what we believe is going to happen is the renewals are going to help capture that. So the $300 renewal could be a real thing.
Okay. But, all right. So they bring them in as kind of a, come on in,
yeah,
move your stuff.
The candy, jiggling the candy here.
Okay. And then funny story, that lease that you signed is going up a
year
little
ago,
bit.
it's going up quite a bit.
All right. What's the pain of moving?
Yeah,
Okay, fair.
yeah.
Got
So,
it.
and another thing that we do at Patriot is a lot of our properties will pay for advertising even when we don't have a vacant unit, and we'll put it out there for maybe a little bit more than what we achieved.
Okay.
So, like us, when other people are looking into the market, oh, what should I be able to rent this unit for? They see us at, maybe we rent it at $9.95. Our apartments.com says $10.50. So they're like, oh, let's charge $9.95.
Gotcha. Okay.
So
all right. It's just a little bit of a
chess game. 100%.
Okay. All right. Interesting. Well, Jacob, I appreciate you being on the show.
Yeah.
Where I'm spilling my stuff here. Where can people find you?
So I'm not on social media too much.
All right. There's a website for
yeah,
Patriot,
website
right?
for Patriot. My email is on there.
Okay.
Otherwise, LinkedIn, you can find me.
Right on. Right on. Well, cool. This has been Authentic Business Adventures, the business program that brings you the struggle stories and triumph and successes of business owners across the land. We're locally underwritten by the Bank of Sun Prairie. If you're listening or watching this on the web, if you could do us a huge favor, give it the big old thumbs up, subscribe, and of course, share it with your entrepreneurial friends, especially those friends that may be interested in investing in real estate, which I think it's safe to say they all should be, right?
Yeah.
So people need a place to live, right? It's like investing in food. We'd like to thank you, our wonderful listeners, as well as our guest, Jacob Walter, the VP of Finance at Patriot Properties. What's the website for Patriot?
It's patriotpropertieswisconsin.com.
All one word?
Yep.
patriotpropertieswisconsin.com. All right. Past episodes can be found morning, noon, and night at the podcast link, fun at drawincustomers.com. Thank you for joining us. We will see you next week. I want you to stay awesome. And if you do nothing else, enjoy your business. And Authentic Business Adventures is brought to you by Calls on Call, offering call answering and receptionist services for service businesses across the country on the web at callsoncall.com. And of course, the Bold Business Book, a book for the entrepreneur and all of us, available wherever fine books are sold.